Welcome, folks. This is the market review for AUD USD. So, this is the one hour chart. So, today we had this aggressive run to the downside, aiming for the sell side that was residing below this low. This is yesterday's low. So, we had that run, but we had this run to the upside, which traded inside this inversion fair value gap. So we had this run to the downside, leaving that this as an inversion fair value gap. So we extend it through and we wait for price to come into that area. Then we can see if time aligns with that. And as you can see, this was at exactly at 2. So this is optimal for the ICT London Open kill zone. So we had that. So you take your fib, anchor it to the low, to that high. So as you can see, this the midpoint. So this shows that we are quite in a deep premium level. So it is quite a premium price for us to go short off of. So we had that. So if you take your fib from this swing low to this swing high, the midpoint should be going short above the mid of this range. So you have this low to this high, you measure that, the midpoint of it, you're trying you see what is to the upside of this, the upper half. So as you can see, we had this inefficiency. Yes, we had that, we traded into that, but the time didn't align. So we chill, wait. So the other inefficiency that we had this inefficiency, as you can see. Let me zoom in a little bit. So we had this inefficiency from this candle's low to this candle's high. We had that as an inefficiency. It could trade into that, but it did not. So here we had an inversion fair value gap. So we had this run to the downside. So we extend that through, and then we wait for price to come into that area. Then you can frame some entries. So what could we be aiming for? We had this inefficiency. We had these lows. As you can see, we had quite a good and a clear sell side that was residing below these lows. So we had that. So this was quite easy to see. So if we go to a 15-minute chart, so as you can see, this is the midpoint of that dealing range. So we traded above the midpoint, and also if you would like to incorporate the midnight opening price, so we have this candle extend that with maybe a trend line like this to the opening price right there, then extend it through. We have that. So we went above the midnight opening price at a premium level. And then we had this inversion fair value gap right there. So we had that. And also we had on a 15-minute chart, we had these two consecutive candles. So this is another block. So you can also use these two candles to frame some entries from here. So this is how the 15-minute chart looks like. We had a clear sell side residing below these lows, and also below these lows we had these relative equal lows right here, and eventually we had yesterday's low. So we had that. So we head over to the 1-minute chart, see how we could have framed those entries. So let me get rid of this first. Let's delete that. So here's a trade that you are supposed to have taken. So we had this run to the upside, and then it formed us a swing low. As you can see here, this is a swing low right there, which got taken out. It left us a fair value gap. So this is showing willingness, wanting to move to the downside, because you have already traded inside the inversion fair value gap. As you can see, there was no candle close above the midpoint. So that is algorithmic, and that shows that price is being rejected from that area. So we have that as an area of resistance, as you can call it. So we had this run to the downside at around 219. So your entry would have been in this fair value gap, and your stop right above the midpoint, because we don't expect price to trade into the upper half of the inversion fair value gap. That will indicate that it is not yet quite clear what price wants to do. But the minute we saw that it was getting to the midpoint, moving away, getting to the midpoint, then shying away, so we could this is signature that price is respecting that level, and the likelihood of it retracing and reversing is quite high. And since now we have time being our number one factor, as I always say, so we have time. We traded above the midnight opening price. As you can see right here, this line denotes the midnight opening price. We had quite a clear sell side that was residing below these lows. So this would have been the first draw on liquidity. So this going short right there, taking partials below these lows, and then going into break even and waiting for price to play out until you hit your TP. So you had that. So if you were to go short that area, you stop right above the midpoint of that, aiming for, we had yesterday's low. So if you were to aim for yesterday's low, right there, so we had that. So that was a 13.75 art trade. So we had that. Also, if you like to pyramid, this is how you do it. So we had this run to the upside. It created a swing low right there. Then we had this leaving us an order block. So we could be going short as this was hitting the order block, and your stop be placed just above that high. Then wait for your take partials at around this area, then hold at break even and wait for price to play out. So here we have a trade that is currently ongoing. This is a demo account because we're not allowed to trade using live accounts, because we are not financial advisors. So we took out yesterday's low. We had this swing high right there, then had a shift in market structure. It even took out this high. So this would have been your entry right there, entry and then stop. But I got it into the trade quite late. I entered the trade in here when this candle was dipping inside this gap. So I went long right in there. My stop was right there, and I trailed my stop to that level. So that's how you frame your entries. That's how you look for the daily bias. so on and so forth. So I guess that's it for today. And until I see you next time, be safe.